Hello, it is Sonia Booker, your wealth builder, and I am here with another episode of Conversations with Sonia, where I get to talk to some of the most amazing people that will inspire, inform, and empower you to live your best life and to build wealth. And today, I have the pleasure of speaking with none other than Tanya Blanchard. Hey, Tanya.
Hey,
Hey,
Sonia,
girl.
I'm so
Hey,
excited to be
girl.
here. I know. I'm like, okay, business, focus, focus.
I know we're gonna have to stay focused. We gotta stay
We
focused.
got to stay focused on
Yeah,
helping.
let's remind each
Absolutely.
other,
Yes,
like
absolutely. Absolutely. We're going to stay focused
we're gonna
on
stay
building
focused.
generational wealth and what we need to do.
Okay, perfect
Yep,
plan.
that's what we're going to do.
Okay, speaking of that,
Okay.
how do you help people build generational wealth?
Well, I own a mortgage company here in Atlanta. It's Madison Chase Capital Advisors, named after my children. Madison's my daughter, Chase is my son. And my tagline is literally wealth for generations. So, owning my own mortgage company gives me the power to really help people. I don't just say I want to do it, I do it. So, I think as a business owner, I'm able to make decisions to get people in homes that I don't have to go to anyone and say, is it okay if?
Yeah,
I just do it. I
yeah.
just do whatever needs to be done to get you in your house, I'm going to do it. So every now and then you have to do a loan, I call it pro bono, but I never mind because I know I'm changing lives. I'm changing generations. I'm changing bloodlines and the biggest wealth gap we really have is because of home ownership. And it's like every time I hear the statistics, I'm like, enough at 46%,
Yeah,
to
42. I mean, the
42.
guy's like,
Yeah,
yeah,
now
yeah,
it's
yeah,
down the
down.
lowest since 1968.
Yeah,
I'm like tired of hearing it
yeah.
and I'm ready for a change.
So, and you're like tired of hearing it to the point where you are doing something about it.
I'm doing
I think
something
that
about it.
that's what's
Absolutely.
so, yeah.
Because I think, too, one of the reasons I started my company is because I just, doing mortgages in Atlanta, I just saw the disparity. I mean, it's just like your rate shouldn't be higher because your zip code's a different zip code.
Yeah, yeah, yeah.
If you got a credit score, down payment, et cetera, you should have, competitive rates. And so that's one of the things that I pride myself on is that I'm super duper competitive with rates, even with everything where rates are now. Just recently was the first time I had a 7 in front of my rate. I kept all my clients at 6 in the sixes.
Yeah.
And so yeah, it's less compensation for me, but the way rates just shot up, it was not easy for a lot of people. And I want to
Yeah.
get them in their house and they can refinance later. So I just
I
think
think that that's such a good philosophy. And when you read all the headlines, I think what's predicted is that in the next few months that the rate is going to drop by 1%, as predicted, estimated. And that the housing market and prices are going to shoot back up. But the perception is so
well,
off.
the perception's off, and I think it's also scaring people not to buy and not to move. But the bottom line is if you don't own your house, you're
Right.
paying somebody else's rent. If you're
Yeah.
not paying your own mortgage,
Yeah.
you're paying somebody else's mortgage.
Yeah.
So if even now, yesterday was the market was just bad. We were like, well, what happened? Like, was this an unemployment report? Like, why?
Yeah.
But it's still better, even if rates never come down.
Right. Okay.
Even if they never come down and you lock today at 7.25,
Yeah.
that's still better than 10 years from
Right.
now not owning anything.
And you can't lock the rent. The
No.
rent is
Woo. Say that again. I didn't even think about
that's the
that.
piece. I mean, and it's like straight up 4, 5, 6% a
Increase
year.
every year.
Like with no stop in sight. And there's no
Absolutely.
stop gaps. There's no help. At least you can stabilize that out.
Absolutely. That's a very good point.
And I think too what happened is we had all-time record low Interest, like that wasn't,
That was artificial.
that was
They were
artificial.
artificial rates.
Yeah,
If you got one, it's great. You know what I
yeah,
mean? If you
yeah.
got one, it's great. But I think if we can, even where we are right now, if you even if rates got back to low fives,
Mm-hmm.
that would still be great. I remember I've been doing mortgages for 19 years, so
Yeah.
I remember when people were happy to get a five, like, ooh,
I
you got me in
know,
a
yeah. And
five. You
then
know what I
me
mean?
doing investor loans,
So
I
you
mean, I
know,
was like 8,
right,
9,
exactly.
12, like,
Exactly,
yeah,
exactly,
yeah,
exactly.
yeah,
So
yeah.
even owning a company, there's so many different loan programs out there. They talk about the entrepreneur loan, but that bank statement loan is vicious right now.
Mm-hmm.
You're in the tens.
Oh,
You're in
yeah,
the
yeah,
tens,
yeah,
and it's because you don't want to, do your taxes, which,
yeah,
just get a good CPA.
yeah.
This is America. Only a few people skate through without paying taxes.
And so do you, I mean, so you feel like, because when I look at the entrepreneurs, I think that the entrepreneurs have it so bad sometimes. Because I mean, meaning like when they don't have access to people like you,
Okay,
for
right,
one.
okay.
But when you're starting a business, first of all, you're gonna have that fluctuating
Income.
income.
Yep.
And then you will hope to get to that 2, 3 years where it averages out to look like something.
Right.
And then I also feel that as an entrepreneur, I really I really think it's a double-edged sword that we have to deal with, that says, oh, you get all of these tax write-offs that are business write-offs and that are legitimate.
Right.
But then they hurt us when it comes to the income number.
Right.
And so it's almost like they had to do those PPP loans where they had to come back and
Right.
say, we're going to take that top number before expenses.
Right.
Because those were liable expenses.
Well, absolutely.
And so why not take them, just because I can't take them to pay more to buy a house,
Right.
when I run a business,
Right.
that allows me to do that,
Right.
legally. I mean, and it's
And that is
super.
true. And I think the saddest part is, before the mortgage meltdown in '08, Fannie and Freddie did have a legit stated loan.
Yeah, right.
I mean, Fannie and Freddie,
Yeah.
not subprime.
Yeah.
Not,
But
not,
do
not,
you think that drove a little bit? Do you think that those loans were kind of too sophisticated for some people?
no, because see, Fannie and Freddie are conventional.
Okay.
So their stated program was really legit
Okay.
stated. It was
Yeah.
like what happened was subprime came in,
Uh-huh.
and they made up,
yeah.
they just created, anybody could be stated. You could be a Walgreens employee. And
Yeah, it's stated
I had a
income.
client, she was customer service. This is back in 2004.
Right.
And she's saying, stated she makes $22. I'm like, girl, you at the counter at
You at the
Walgreens.
counter.
You don't make
Yeah.
no $22 an
Yeah.
hour. But that's really what ruined it for entrepreneurs. But I will say this with Freddie, and everything, we run everything through automated underwriting. And just
Yeah.
for everybody out here, you hear people say Fannie and Freddie, and they're just government sponsors agencies that the government backs, not owned by the government. They're publicly traded companies. But Fannie and Freddie, Freddie will allow you, if you've owned it used to be, if you ran it through automated underwriting and you got an accept because you had great credit, what you were putting down, your assets, they only required 1 year tax returns. And in the last few years, they changed it to you have to own your business for 5 years.
Oh my goodness.
But it helps a lot of people that are in business for a long time.
Because, yeah.
And I tell them,
Yeah.
even
But talk about that, because it helps, because those 2 years,
You don't
those
have to
bad
average.
years, right?
But you don't have to average. I always tell people, it's like if you're taking a test and on your first test you got a 0, and your second test you got 100, you're like, woo, 100. But you average that out, you got a 50.
Mm-hmm.
That,
Right.
and
Right.
that's what we have to do with your income.
Yeah.
So what's nice about the after 5 years using 1 year tax returns, I tell people that 1 year tax returns, you could do a lot in that 1 year. Think about it.
Yeah.
If you did your taxes in January, listen, if you did your
Ooh.
taxes in January 24,
Yeah.
you could technically use those tax returns until October 2025 if you filed an extension. So you could use that almost year and a half
Wow.
to buy your primary residence, get that secondary home in Florida, buy investment property. You could do all of that, and then you can go back to business as usual.
Yeah.
But you have to be willing to, the whole tax thing, I just feel like it's so to think that you get to just keep all your money,
Right. Yeah. It's not. Yeah.
it's just not
Tanya,
realistic.
that's why I like you.
Okay.
That's why I mess with you, Tanya. That you have just helped thousands of people right now get home, okay? Especially my entrepreneurs, because you know I love
Yes,
my entrepreneurs.
absolutely.
And we have to, because you take that risk of being an entrepreneur, that leap, and then it's like you get punished on this end of like, not being able to get a home and
Right.
all this stuff. And it's like, and some of this is about just information that is not known.
Absolutely, it's
Yeah.
not known, and I think social media has not helped.
Yeah.
They call it entrepreneur loans and, no doc loans and all of that, but nobody's telling you how much you got to put down.
Right.
Nobody's telling you what
Yeah.
that interest rate is.
Yeah.
And I just recently did one for a girl. She had a 732 score. Her rate was 10.25%.
Wow.
But I immediately said, okay, you need to get with a CPA.
Yeah.
Let's get with a CPA. Do your taxes. Like you can't. I don't. It's just I think I'm just so
Yeah.
old school. I'm
Yeah.
from the
It's
banking
some,
world.
yeah.
That it's just
You OG,
it's
but that
it's
it
hard
has
for
to,
me
yeah.
to be like, oh
Just
girl, 10.25. Yeah. You had 11. I'm like,
Right. Yeah.
so it pains me because that's money that you're just wasting.
And that's like, I mean, that's significantly
That's
monthly.
yes.
Like,
That's
annually of
and
what
and
that, yeah.
unfortunately she was buying a house that she was renting already, and she had the money, she had the reserves, and the nice thing with those loans are called non-qualifying mortgages, so those are non-QM, and what that means is they're not backed by Fannie and Freddie. So during COVID, you weren't automatically, you had to call your servicer to see if you could go in forbearance or if you could do a deferment, where if you were with Fannie, Freddie, or FHA, it was like, okay, here are the guidelines, you can do it.
Yeah.
But if you were in one of those entrepreneur loans, it was kind of like back in the day, you want a subprime loan when there was really no
Yeah.
protection for you.
Yeah.
So
Yeah.
I just feel like it's okay. It's a Band-Aid.
Yeah.
I'm not saying
Yeah.
if that's the only way you can get it now and you have the down payment
Right.
and you're okay with that monthly payment, okay, but what's your exit
What's
strategy?
the exit? What's
And what's the nice
yeah.
thing, that's what I was going to say, with non-QM on investment loans, there's always a prepayment penalty. You can buy your way out up to a 1 year. You're always going to have a 1 year on investment prepayment penalty. But what's nice with non-QM, no prepayment penalty on a primary residence.
Okay. Yeah. See?
Which is also part of the Frank Dodd Act. There were a lot of things that came out of that act that really did protect the consumer.
You just smart. You just smart with it. Okay. I mean, so, all right. Some of this would be, it's always relative that you want to save the most amount of money. I think part of the issue now is that the home prices are also going up.
Yes.
And so it's like where you could have had, like, you can't be pulling no rabbits out of hats when
No.
you overpaying for a house and overpaying on interest rate.
Well,
Like,
and you know what? In reality, we're not even overpaying anymore because this is the market now.
yeah.
You
I
know,
know.
it's
Yeah.
not, we're not really, sorry.
Yeah,
I'm like, we're
sorry.
really
It's
not
like,
over.
yeah, you're right.
This is
Yeah,
Atlanta.
yeah.
I mean, this is going to be horrible that I want to say conforming loan limit, I think it's 724 and FHA is 595. Think about that. We're right behind New York and California.
Right behind.
We
Good
are
old-
right behind
yeah.
them. To say you can buy a house in Atlanta for over 700,000 with 3% down.
I know. That's like.
That's a first
Yeah,
time buyer,
that's a first-time
conventional.
buyer, conventional.
FHA goes up to 595 in
Yeah.
Metro Atlanta.
Yeah.
That is insane.
That
I
is
mean, you
insane,
think about how
yeah.
long you've been doing real estate
Right,
in
yeah.
Atlanta, and just think for years.
I remember the 277.
Exactly. And for years it was 417.
Yeah,
That
right.
was our conforming loan
277,
limit. But
417, yeah.
Shatima and I were talking, and I said to her, but you have to realize these aren't fake numbers that they're coming up with. It's the income. People are making money here.
Yeah,
Yeah.
yeah.
So that's the flip side.
I mean, like, I am that, like, I just see all the sides of it, right?
Yes, absolutely. You
Just
do.
like you. I
Yep.
mean, because
Yep.
I'm a post person. I'm like in the real estate market because I have to make a lot of decisions
Decisions.
about a lot of things, like what I'm going to build, what's going to be developed, what's the timing, who's going to buy it, who's going to rent it, who's going, and so
Right.
it's just
Right.
like always. And so when I also look at that, to your point, people are making money, a lot of that's like implant money,
Mhm.
transplant money, I guess, as they would call it. And so as
Absolutely.
the tech is growing and the big companies are coming in, even we saw it during COVID. I mean, I could not believe it that we were bidding against, well, first of all, you're bidding against hedge funds, which
Yeah,
is
it's just a
just
whole
like,
nother
that's a whole
story.
nother story. But you were bidding as a Atlanta local that was buying a place. New York came in, Seattle came in, Denver came in,
Cali came in.
Cali shut it down.
Cali.
Cali shut it down. Like that's a bit like, but what was happening is now you had all these people with great jobs making great money, and their companies telling them they can live anywhere because
Anywhere.
they're working virtual on these tech
Yep.
great paying jobs.
Yep.
So they were like, "What? This is 500,000? That's nothing, because I can't get this in New
Exactly.
York. Where
Right.
you
Oh,
from? You like I can't get this."
yeah.
And so the poor locals were like, "This was just 300." Like, and that was what everybody was aspiring to as their level of what they saw in Atlanta. And then when everything switched, it was just like it
And
just
that the moral
shut
of the
out people.
story is get in when you can.
That is definitely
Get in when you
when
can,
you can.
because just
Yeah.
think all those people with the 300, 400, they were waiting for
Yeah,
something. Well, what were
yeah,
you waiting for?
yeah,
You know,
yeah,
last year at this time is when rates started going up. And I never forget in November, I was locking people at 5.375.
yeah. And everybody
Ah,
was like freaking.
ah,
Everybody was
ah.
like, what?
Now somebody would cut off their little, here's my pinky, give me
Right?
five and a
Give me a
quarter. I
five
don't
and
need
a
my
quarter.
pinky.
Yeah, right. Can you give me a five and a quarter? Okay.
Right.
Before we talk about something else, how do you
Sure.
feel about buying down interest rates? Do you think that that's something? Don't
No,
do it.
no,
Don't
you
do it.
got to do the math. I
Okay.
always do the
You do
math
the
with my
math.
clients. You
Okay.
got to do the math. You've got to say, okay, and this isn't scientific math. This is just me talking. So you're gonna spend, let's just say, $10,000 to buy your rate down a quarter. So you're only really saving $75. Divide that into 10,000 at break even point. It's not worth it.
It's
It's
not.
better.
So now, even if
No,
what?
no, oh, so
Okay.
sorry. So that's discount points. The buy downs are different in the sense that only the seller or or I don't want to get into realtors because I don't think
Yeah.
realtors should be giving up their commission for buy downs for clients. Like that,
Yeah.
that's
So
your,
how?
but it
Yeah.
has to really be the buy downs.
If the seller
The seller
is,
will
and you
pay,
can,
the
yeah,
seller can contribute. And I like buy downs.
yeah.
I like buy downs because
Can you explain that?
oh, a buy down?
Yeah,
Absolutely.
just that
Yeah.
way.
So
Yeah.
okay, so there are all kinds of buy downs. So you've got a 3-1 buy down, a 2-1 buy down, a 1-1 buy down, a 1-0 buy down. All a buy down is that you're taking that. So let's just say I'm going to do a 5.75. So I literally just locked one the other day. So you're locked at 6.75. So that's really your rate.
Okay.
So a 1-1 is the first year you're at 5.75.
Okay.
The second year is technically 0, 1, 0. So you're still at 5.75 for 2 years.
Okay.
And then after the 2 years, you're at 6.75 for the life of the loan.
Oh, I see.
So people, either my client called me and said, she said, Tanya, I thought we were doing a buy down at 5.75. I said, you are. When you get to closing, it's like an escrow account.
But she essentially bought it down to
She
the
brought
five,
it down to
yeah, from
5.75
the six,
for
yeah.
2 years, but her note rate is 5.75 because what happens is at closing, you literally sign a document. It's an escrow account.
Yeah.
It's an escrow account. So your payment really is, let's say the payment is principal and interest is $1,200, but with the buy down it's $1,000. Well, over here it's $2,400. So every month they take that 200 and put it with your mortgage.
Okay. Okay.
They
Yeah.
put it with your
Yeah.
mortgage,
Yeah.
so it's a
Yeah.
totally separate document
Yeah,
that you
your
sign.
escrow, as an
All
escrow,
it's
yeah.
it's like really towards escrow. So buy downs are great because the seller is paying for it.
Yeah.
Discount points. That's what
That's
I
like,
was
yeah.
first talking about. That's a whole nother. You got to do the math.
Yeah.
It's like I don't
Yeah.
even let my clients do that. I'm like, no.
But that's always good that you have those type of, you just got principles about it.
I'm like,
Yeah,
no,
yeah,
no,
yeah, yeah.
no. Like, I'm like, let's just do the math. Look at the break even point.
Mm-hmm.
Don't you think you should take that $10,000, put it in the bank,
Right,
and then just
yeah.
pull a little bit every month forward instead
Right.
of
And you might can grow it.
you
Yeah.
might can grow it, and then rates. I do believe, and we can transition, but I do believe rates will come down. I think it's just, to me, I don't want to get all political, but rates are really based on
Yeah.
mortgage-backed securities.
Mm-hmm.
So why rates stayed artificially low is because the government was buying so many mortgage-backed securities
Mm-hmm.
to keep the rates low, and
Yeah.
now they're not.
No, they're not. Yeah, yeah,
So I'm
yeah.
like, can we take some of that money
Right.
that you send into other countries and
And
buy some
right, and
mortgage-backed
buy some mortgage-backed
securities to bring it down a
securities.
little bit? But
Yeah.
I really do believe, and it's
And then do you feel like when you have election
oh,
years,
I
stuff
was
like
you took the
that? Yeah,
you
yeah,
took
yeah, yeah,
yeah,
yeah,
it's an election year, so
yeah.
rates are definitely going to come down. I don't know if they're just spiking them so that they only come down to 6.
And then, but you also have to, like you say, first of all, stop waiting. I hope that that's a message for anybody. If you're thinking about it, stop waiting. What are you waiting on? And what you're waiting on could be worse than, yeah.
Absolutely.
Because what we can't control is house prices. The inventory is so short that it's like nobody has to come down on house prices.
No, they don't. And they're real comps.
Yeah, they're real
they're
comps.
real comps.
It's
So
real,
it
yeah.
it
And it is what it is
right
right now. I'm like,
it is
that's
what it is
that's a
right
real
now, but
price.
it's still better
Yeah.
to own it.
Yeah.
It's still
At the
better to
end
own it.
of
I
the
have
day,
a
yeah.
young gentleman, he bought a house in Macon, and we laughed. He was in a bank statement loan last year, and his rate was like 9.9%. He's like, ooh, Tanya, ooh. But the sad part is someone had jacked him up. A loan officer told him to do his taxes at like 175, and then the brother didn't even get the loan.
Oh wow.
And I said, who does? I would never tell you what to do. That is between you
and
and
the
your
CPA.
CPA.
Right.
So
yeah.
now he's selling the house. He's coming back to Atlanta. And I said to him, call him John. I said, John, he's like, Tanya, I think I'm just going to rent for you. I said, no, you're not.
Yeah.
I said, right now, with your 2-year tax returns, we can go FHA. You can get $350.
Mm-hmm.
I said, buy something knowing that in a year it's going to be investment property.
Yes.
I said, so I'm not going to let you go rent.
Yeah.
Because you got these proceeds from this house.
Yeah.
You paying your taxes. So you're going to make
Buy
more
what
money.
you can,
Buy
right?
what you can.
Yes,
And then in a year you get to now you can go and buy investment
Take
property.
that equity if you want,
exactly. Or just
rent it out.
I say he's young, so I think it should be his first investment property.
I do too.
So I'm like, just make it your first investment property. I said, but do not rent. He's like, okay.
Rent. Yeah.
All right, Miss Tanya. All right. I'm like, okay.
I'm so glad that John listens,
Yeah, exactly.
and that's the thing, because I run into so many people that have said, I'm waiting to buy my dream house, so I'm renting. And it's like, but get started and buy this as your house that you could live in,
Right.
and then make that, and then go buy your dream house.
Right.
But it's
I say it like all the time. You'll hear me say, I'd rather own a 3.2 than rent a 4.4.
Every day. Oh, I love it.
Heck, I'll take a 3.1.
Right, yeah, that
I
I
own
own it. Yeah, and
I own it,
I'll work
especially
on
if you
that
have
second
children.
bag. Yeah.
And we could stop there. I probably feel like my biggest passion for homes and why I will help and do what I can is the security that a child has that it's their house.
Yeah.
A child doesn't care how big it is, how
Yeah.
small it is. They just know when they come in off that bus, that's their house. They're going up to their room.
Now you have a thought process about kids and college and talk about that.
So I really feel like for parents out there that are listening and you've got younger children, we're not even going to get into. We're going to leave college and student loans alone. We're not even going to touch that today. But this is what I say: when your child is a senior in high school, as soon as they graduate from high school, you put them on 2 of your cards. This is only for our fiscal responsible parents. If you all jacked up, just
Don't
leave
do
him.
it.
Leave little Johnny alone.
Don't
Just leave little Johnny
don't
alone.
put him in the way.
Yeah, exactly.
Right.
Don't put right.
Okay.
So you put them on 2 of your cards their freshman year. They're authorized users. Their sophomore year, you get them their own card. Okay, you do auto debit out of your account. You monitor it. You don't say, oh, that you monitor it. Now they're a junior.
Yeah.
Now when they're a junior, now they've got a credit score. After about 3 years with 2 authorized users and 1 account, you're probably going to be in the low sevens. You're going to be in the sevens. So now they're going into their junior year. Guess what? Now you get to buy a condo or a townhouse or a house
Yeah.
for 3 to 5% down, because now as a parent, you're the non-occupant co-borrower.
Non-occupant
co-borrower.
co-borrower.
So now your child has a credit score, income $1,
Yeah.
no income, job, school.
Yeah.
Education is a job.
It's a job.
So now junior year, now little Johnny, all his friends are paying the rent. They're paying the mortgage.
Yeah.
They got to rent somewhere.
Yeah.
So my philosophy, even with that, you get the leases with the parents.
Right.
Don't not their best friend who they really like, and Lisa's good for it. Talk to Lisa's parents.
Right.
You get the rent, and then when they graduate, now it's family decision time.
Yeah.
What are we going to do? Are you going to stay here in Atlanta? Are you going to stay here in Colorado? Go, Dion. Are you going to stay here, or are we going to sell it? And now you get to go buy, you might want to go to California or somewhere.
Right,
You might go anywhere, Maryland, anywhere. You have some options.
Yeah.
Or you might say, you know what? This has been a good investment. Let's just keep it. Imagine if people who go to UGA did it.
Oh my God.
Kennesaw.
Yeah.
You know
They
what I
do
mean?
it all day, every day.
They do it all day, every day.
day.
My girlfriend, Tiffany Hall, she's an attorney here. Her husband Jeff builds up in Athens, and oh my goodness, they've got some beautiful homes for students.
Yep.
That's a whole nother. That's a whole nother niche market.
I mean, AUC.
Yes.
I mean, it's all.
And
over.
housing
It's
is
just a
always an
philosophy.
issue
Yeah.
for great schools.
Yeah.
For dorm shortage, etc. So I just think that that's a great way to build credit and to get them started on their way. They owned a home at 20. It'll be no looking back.
And so your generational, so not only do you talk about and promote and help other people understand the impact of home ownership, real estate, and generational wealth, why was it important for you to bring your kids, your now adult children, into the business?
Because I just feel like this isn't a plug for I have a course, Madison Chase Academy. I teach loan officers how to be loan officers. And it's such a lucrative business. It really is. It's just, and it's still majority white. You know what I mean?
Yeah.
On social media, it'll make you think that there's a whole bunch of black loan officers, a whole bunch of black realtors. It's really not.
Yeah.
You go to the
and
ARA
let me just
Awards.
put one plug. Let me, like you said, you're not plugging a course you have, which is
exactly.
an amazing course. But I'm about to plug you because you're one of the few black. I don't even have to put female, but now I'm really done shrunk it. Lenders.
Yes.
Lenders.
Lenders. Yes.
Lenders.
Yes. Non-depository bank.
That is crazy good.
That's crazy good, but this is probably 2022 was probably the first year I kind of stuck my chest out a little bit because I'm just very humble and I know that it's really just God. And I always, when people say, oh, you own your own mortgage company, I would say, well, you can too. It's just a checklist.
Yeah.
It really is. You just go online to NMLS, pick which state. They're the requirements. It's a checklist, but how many people say and don't do?
Right. Yeah.
How many people say and don't do? But I knew that it was crucial for what I wanted to accomplish.
Yeah.
And being in Atlanta for all these years, I've just seen it. I'm a mental notes girl. I always tell people I just take mental notes.
Yeah.
You could do me wrong and I'm going to hug you. Love you, girl. I'm going to keep moving. I just take mental notes.
Yeah.
And I've watched I've watched the racism over the years in mortgages. I've watched what they've done to us.
Yeah.
I've watched how I've had to fight for my loans.
Yeah.
You know, I know guidelines,
Yeah.
and that's one of the things that, you know, I teach in my course. You got to know your guidelines.
Yeah.
You got to know your guidelines.
We'll talk about that. We'll talk about the course, like,
Sure.
and why did you develop it? Um, and then I feel like it might all come together. That when did you know? Like when you started, when did you know it was like, oh, I could be lucrative?
My first year. You know, my story is I was married for 10 years. I divorced with no alimony, no child support by choice. We had joint legal and physical custody. So I had 2 nights off, and every other weekend, women, you know, a check is good, but, you know, going to get your nails done and hair done on Wednesday night and not getting up on Thursday. It's awesome. And they're with their dad. You know what I mean? They're with their father.
Right.
So I went 100% commission because I wanted no income gap, no income limit. And I wanted to be able to spend time with my children. So 100% commission, although, oh, that's a risk. Oh, but if you're working, it's not. The first year in anything is going to be the hardest.
Right,
And
yeah.
this year, you know, it's so crazy. The first year and the 19th year were the hardest for me. I feel like I was in 2004 this year. This was probably my hardest year because I did not read the room with the rates and because I'm just so used to closing.
Yeah,
You know, I'm so
yeah.
I didn't read the room. I was kind of like, oh yeah. And then I looked up like, oh, look at my pipeline. Oh, wait, hold
yeah,
on.
that's serious.
Right. But the nice thing about here's the thing about being a loan officer. If you have, even if you're just starting out, and let's just say they're just going to pay you 1%. 1% of the sale, 1% of the sales price. That's it. If you're doing a $400,000 loan, where are we in Atlanta?
Right, yeah.
FHA, the loan limit's
loan,
$595.
right, yeah.
Conventional's over $700. So
Right.
if you're just making 1% on the loan, $400,000 loans that
Right.
month, that's
Yeah.
$12,000 you made.
Yeah, yeah, yeah.
That's $12,000 you made.
And
So
I mean, heck, if somebody closed one, that's $6,000.
there you
You
go.
know, I mean, that's
there you
not
go.
just-
And
yeah.
and it really is. It's just one of those things that it's a market, it's a job opportunity, it's a career
Yeah.
that more people should really look into.
So how are you making it easy, or like through your course? Talk about your course and how people can connect and become a loan officer.
Yeah,
and work
absolutely.
with
Yeah,
Madison
absolutely.
Chase.
Yeah,
Okay.
absolutely. So to become a loan officer, you have to get NMLS license. And the biggest thing with NMLS is that in Georgia, so this is just me helping you. If you know everybody's watching this all across the U.S. In Georgia, you cannot have a felony at all. So because my company was based in Georgia, Florida, California, etc., I can never hire a felon because I started my company in Georgia. However, let's just say California, I know for sure. California, you can have a felony as long as it wasn't financial. So to me, you pick NMLS Georgia. You take it's a 20-hour class. You have to take a test. When you pass the test, then you get your NMLS license. That is just, you pay for they're going to check your credit report, no collections. If you do have collections, they want you to have a payment plan of 3 months. You can't be default on any of your student loans. And credit score doesn't matter. So that's the beauty of it. You can have a 582 and get licensed as long as you're current on everything. And if you have a collection, you're making payment plans. So that's the beauty of it. It's not a credit score driven. It's just clean credit. You know what I mean? You've got to be responsible. And then after your background, you get a company to sponsor you. And the reason that I did my course is because everybody's busy. So even if there's only one other company out here that in Atlanta that offers loan officer courses, and I did them. I'm not going to say their name because I'm not saying anything negative, but it takes too long. It's like 3 months, nobody has time. I put my daughter through it, and I thought she was just, like, Mom, this is so, but then so tedious. Like, you got to get a calculator and figure it out by hand, and all that's great. But when you're 100% commission, you got to make money. So that's why my course is called 6 months to 6 figures. Because if you do everything in this course, is 7 modules. I'm speaking, you get a workbook, I give you a jump start. And recently, I decided there's 6 books that I want you to read. So now I'm going to give you the 6 books when you buy the course. Because I feel like the 6 books that I have are Raven Fans, Mr. Schmooze, How to Win Friends and Influence People. I love Mel Robbins, the 5-second rule, the High 5 habit, and then the 12-week year. You read all those books, you do my course, there is no way. There is no way. And then I give you a resource guide. So I give you all the guidelines that you can just go back to. I give you sample templates.
So is that your pace? Is it one that you work
Yes,
at your
your pace. Yep, it's at your
so
own
it's just
pace.
modular.
It's 7 modules, and every one is, the first one, I love it. It's called Mr. and Mrs. VIP.
Yeah.
It talks about the client. I had a young loan officer come work for me. I listened to him do a loan application. I was cringing. He was like, name, and you would be like, Sonia Booker, address, 123, where you work, how much you make, back to social. But I said, what are, I said,
oh no, cut. And so that's your
Time
contribution.
out.
And so
Absolutely.
this is your contribution to the marketplace, to making your industry a
better place, even for the clients, because you
Yeah.
have to realize there is nothing like issuing an approval letter and then that person goes out and gets a house and then they get denied. I think on my watch, I think I was at Fidelity Bank. I had one client lose earnest money. And I think it was like $2,000, something like that. Not that it wasn't a lot of money, but that was it. You don't lose earnest money on my watch.
Yeah.
You got to pay attention to those contingency dates. But the saddest part is when you got to go back to that client that found the house, now you got to go back and tell them, oh, I didn't realize that you have over $1,000 in collections, so this is a manual underwrite, and now you don't qualify.
Yeah, boo.
Boo.
To the people
Boo.
that do
Boo for
that.
the agent, boo
Right,
for the
boo to the
seller.
people that do
Yeah,
that.
right. But it's boo. You feel sorry for the
That's so
seller.
awful.
You feel sorry for the buyer. You feel sorry for the listing agent. Like, you feel sorry for everybody in the
Because you didn't do
transaction
your-
because you didn't do your due diligence and you didn't do your job, and now now the person doesn't get their house, they feel defeated. A lot of times they don't want to try again because they feel like, and sometimes I'll have to come in and save a deal. And I always tell a client, I understand you've been through a lot.
Yeah.
You know what I mean? And
Yeah.
I always started off with that. I always
Right,
started
so
off
you
with,
can empathize,
yeah, I'm like, I
like-
know you've been through a lot, but listen, if you just do what I say, give me your documents. I closed an FHA manual underwrite with a new appraisal in 11 days.
Yeah.
And the previous loan officer had it for 40.
Yeah.
So I had to come in and talk to the listing agent to say, we can do it, and then talk to the seller.
Yeah.
You know what I mean? And talk to the seller. After 19 years, I'm not scared to talk to the seller.
Right,
Agents,
yeah.
I always laugh at agents when they want me to talk to the seller. I'm like, okay.
You want me, Miss New Yorker, to
I
get
don't
on?
mind, because I had one recently and I love my clients, but they were so slow. I have text messages where I'm like, if you don't give me these out, and it's always on the loan officer. So out here, if you want to be a loan officer, it's not for the faint.
Yeah.
No matter what happens, it's your fault.
Right.
The person could lose their job.
Right. They didn't get the form, they didn't do whatever.
Right.
Right,
They had a
yeah.
foreclosure they didn't tell you
Yeah.
about. It's still your fault. And I had to, the listed agent was just over me, over the whole transaction. I said, do you mind if I talk to the seller? She said, by all means. I was in Orlando at the conference, and I called the seller and I said, hey, Miss Jones, I said, I'm going to tell you what happened. This is why we don't have our clear to close. She gave me a story. She's like, Tanya, I've rescheduled surgery. I said, oh, Miss Jones, I'm so sorry. We got the clear to close that Wednesday.
Yeah.
But every day I called her or I
Yeah.
sent her a text message that morning.
So good.
You know what I mean? Just to let her know.
To,
And I told her, I said, I'm not going to have you wait in vain. Now, I'm not
going to.
Yeah, well, I'm not going to be like, okay, hopefully we got, right. No,
just keeping
I'm not just keeping it going. You know what I mean?
Yeah.
So she was so happy. We got the clear to close Wednesday, and I said, let's do Thursday. And somebody said, oh, well, maybe Friday. I said, listen, we accommodate Miss Jones.
Yes.
We
When would you like to close?
you have to drive in.
Yeah.
You've been through a lot. So this whole time of this closing is going to be what Miss Jones
What Miss
says.
Jones says. That's so good.
You know?
Tanya, oh my goodness.
I know we can talk forever. You know that, right?
Yeah, but I do want to just say really quick
Yes.
that you do investor loans.
I do.
For my investor people
Yes.
watching.
Yes, absolutely. Yep.
Because so that's important.
It is. It is.
And some really good products.
There's some really good products out there. For the investor, they have the DSCR loan, which is the debt coverage service ratio loan. So it's really the formula of what your payment is and how much the rent is. Totally 100% stated income.
Is so good.
Yeah, no income docs. Yeah. You do have to have reserves. You do have to have reserves for the property, but other than that, that's it. I mean, it's a super duper it's a super duper easy loan, and it's for investors.
Yeah,
you know, and when you're first starting out, you know, if you don't have the documentation, the income for investor, it's good, and then you have somebody else servicing that debt. So it's not you that's got to make that monthly payment.
Well, I know one thing. I can't wait for your podcast. You got to come back like a whole bunch of times, because it's like every single nugget you said, we could expand on that. Like, just that be like, oh my gosh, let's dig in.
Exactly.
I mean, it's just like you're amazing times 500.
Oh,
but you already
I
know,
love you.
like,
Thank you.
Million times over. I'm grateful. And then I want you to tell everybody how they reach you, because I got a feeling people are going to be calling you.
Okay. Yeah. So I'm easy. You know, on Instagram, I'm Madison Chase Capital Advisors. LinkedIn, I'm, Tanya Blanchard, and my website is mccapitaladvisors.com. So just reach out. I'm super excited. I'm actually gearing up in January. I will be hiring I have loan officers now, but I'll really be expanding the team.
I love that.
Because I'm really, expansion is good. And I think it's mentally, I've been doing this for 19 years. March will be 20. And as much as I love you people, I do not want to say name, address, and social no more.
I love it.
I want to teach the next generation.
That's right.
I want to teach the next generation. And I will say this. You know, what I love about the loan offices in Atlanta, they call me like the OG. Yeah. Fake man. Right, But you know what? It really is a compliment.
Yeah,
I just think a lot of times with age, as you get older, and I'm like, Tanya, your daughter's 27. Yeah. You know what I mean?
But you're
like,
so wise
they're 32,
with that.
And so they just respect me. They'll call me. They'll say, I've got one girl who just started her own firm. I was behind her, rah. She's using my compliance person.
Yeah.
I'm like, okay, this is what you got to do. What you need. It's how many billion-dollar business is Atlanta, in real estate in Atlanta. I can't do every loan.
Right.
My company can't do every loan.
So here's the big takeaway and closeout that I think that speaks just volumes to you. Not only are you concerned about people, individuals, Black people, everybody building generational wealth and home ownership, you're also fixing the industry and making the industry better. So your legacy of like how many people that you're helping to get in homes that, like you said, those kids grow up, those kids have a home, they be able, like you're impacting generations to come.
And let me just say
it's just so beautiful.
It is, as a loan officer, 100% commission. It might seem scary, but listen to this. For 19 years, I've woken up and decided, what do I want to do?
Well, you already know.
Oh, I know who I'm talking to.
You already know that when we hang out and when we hang out, how we hang out, you already know. I'm 22 years into this entrepreneurial life, so
and it's not easy, but the freedom. The freedom. You don't miss anything. You don't miss anything at school.
Yeah.
Whatever you want to do, you can do. And guess what? It's between you and God, your schedule.
That's right.
Not man.
And half of the time now, I'm just like, God, what do you want me to do?
You want me to do? Say that. Yeah, right.
Oh my gosh. Yes. And we didn't even, we got to come back, because I could talk to you all day.
Yes.
Because
thank you.
Your spiritual side of why you do what you do is so important, and it directs so much. That's why you're so impactful And I just love it all. And you gave all your information, and
Yep.
you'll definitely be back.
Yes, I will
Look
for
for
sure.
Tanya. I
Yes.
mean, when I tell you there is nothing like this gym, there is nothing like it. I told you you would be inspired, informed, and empowered to
Yes.
go out and build your wealth, buy a home, create generational wealth, start a business, become a loan officer, scale your loan officer business up, six months, six figures, do all
There you
that.
go.
All right. Until the next time, you've been listening to Sonia Booker, and happy wealth building.
Woo!